I thought it was interesting in the discussion from all three speakers that the issue of non-tariff trade barriers or SPS regulations came up as it almost seemed as if as we move to remove the conventional trade barriers that these become more significant. Now, is it because countries, and included in this is Australia here, is it because countries are using them in lieu of the traditional trade restrictions that have applied in the past, or do you think it's simply a fact that as the traditional trade restrictions and trade barriers have gone down, the focus has turned to those particular types of issues? I'd be interested in any of your comments, in fact.
I'll take first, and then we can have, I think, the others jump in. I think you have an evolution of a couple things. The evolution of more trade, so just with the sheer volume of trade, you have additional things coming up. And the quotas and tariffs are fairly obvious and fairly easy to understand, so I think these is a new field. I think the technical capacity and capability is also a critical thing going forward in the process. And I think the other one is just with science advancing, our ability to test for things. Years ago, you could only test parts per million. Now you get parts per billion, parts per trillion. So I think our ability to test for things is also improved. So I think you have a combination of factors coming together, and I think in general, most people are trying to do the right thing. It's probably more capacity and capability that's evolving quickly.
I think from an industry point of view, as you've heard, competition is really intense, and speed to market is important. So if you're caught and you're trying to get into a market and you find, for example, as one winemaker said to me, if you spell Mount Gambier, MT Gambier, as distinct from Mount, M-O-U-N-T Gambier, the former will be rejected, the latter will be approved. Now, that delay that occurs and that issue in a meeting such as this as a policy issue is not what you're talking about. It's not, but at that frustration level of getting your product into the United States, you know, to simply say that, well, you should have read it carefully, and you should have done this, you should have done that. The point is, it takes time. So we move from tariffs to a number of these issues, but I think what's driving it is that speed to get to market and not be caught by things that hadn't been predicted about whether it's about residues, whether it's about labelling, whether it's about spelling. You'd like to have systems, commonality, that you can get into that market and get your product ready.
Yeah, I'd just like to add that I mean, based on your question, Nick, is it have we always been using SPS barriers and they're just more exposed now that we've lowered tariffs, or is this a new phenomenon? I think it's sort of a combination of both. I mean, I think that during the Uruguay round, I think tariffs were reduced quite substantially, and so I do think countries have shifted somewhat to using SPS policies as more of a barrier. But I mean, they've always been. I mean, countries have always used animal, plant, and human health policies to protect animal, plant, and human health. But I certainly think that now that tariffs have been reduced, I think there is more of a reliance on SPS. And it's not just the actual policy itself. I think there's a lot of administration that goes into this as well. I mean, just as an example, I'm going to use an example of Australia and this issue with heat-treated beef. There was a report that basically a visit by FSAN's experts to the United States to look at our slaughter facilities and our BSE protection. And basically a report was supposed to be issued fairly soon after this trip took place. And basically this trip took place about 20 months ago. And the report was finished and reviewed by the United States, and probably about, I'm guesstimating about 4 or 5 months after the trip took place. And the report essentially stayed inside of FSAN's for the remainder of the time that we've been working over the last, essentially, year to get this report released. I mean, the report was finished, it was done, but it was essentially sitting and waiting to be released. And there was really no more technical issue involved. It was basically a matter of getting the report signed off on and released by Fazance. And we've been struggling to get that released for the longest period of time. And finally it's happened, but these sorts of things, these delays and risk assessments that take months or years to be even started, and then they take another 6, 7, 8, 9, 10 years to be finished. I think sometimes that becomes unreasonable. So, and it's not just Australia. All countries do it to some extent. We just have to sort of get away from that.
Okay. Any questions around the room?
Hugh, this is just a quick one around TPP and where you see the conclusion of that, probably particularly for those commodities that have missed out on some of the bilateral trade agreements like sugar and dairy.
Yeah, no, it's a good question. It's a difficult question to answer. I will say that, as I mentioned in my presentation, I think the current debate now is in the House of Representatives as to when TPA is finally passed. It's an open question. I think the intent of Congress is to get it done as quickly as possible in the Obama administration, to get it done as quickly as possible, but there are political difficulties. I think from my standpoint, in my view, I think there's sort of a coalition that's built between the far left and the far right. I think they've sort of joined forces and sort of trying to prevent TPA from being passed. There's a lot of politics, obviously, that's wrapped up in it, a lot of political reasons why it's happening, but I think you're seeing a lot of difficulty right now. And I think the general consensus is that it's going to pass, but there's a lot of concern about transparency, about how the negotiations are taking place, how they're being shared with Congress and with the public, in particular in the United States. I think there's concern all around the world, but in the United States, I think this is one reason why there's some difficulty in moving this TPA agreement more quickly through the Congress. And in terms of sugar and dairy, certainly those are areas within the TPP that are areas of difficulty between Australia and the United States, but also other countries as well, Japan and Canada, in particular Canada. When you're talking about dairy, we're really, what I think we should be focusing on are countries that are really need reform in their systems. And Canada is one country where you have supply management in dairy, and as long as that stays without reform, I think we're going to have some difficulty in dairy. And so I think instead of the US and Australia and New Zealand fighting amongst each other to try and figure out the solutions on dairy, we need to look at countries that really need some progress in terms of reforming their systems. In terms of sugar, well, that's a question that we're going to need to resolve.
There we go. Tony, perhaps a question to you. A lot of the discussion, it's not specific to Americas, but a lot of the discussion today has been around, because of capacity constraints, the ag sector in Australia needing to move to higher value markets. Yet if we look at the wine industry, it was probably the classic example of doing that very thing through the certainly the first half of the 2000s and the late 90s, and growing as a consumer product. But then it all came to a crashing halt. And I know you've said a couple of things about the GFC and the emergence of competition. Do you think are there lessons there to the rest of agriculture about the pursuit of brand and the pursuit of value markets? Is it an area that's not necessarily a lay down path to success?
It's a great question, and the jury's out on the answer, to be honest. The one view is that if you push to premiumisation and you push for that end of the market, there's greater value, and therefore long term, because of our production costs and so on, we can compete better. In wine, the other view is you can actually be very efficient. And if you take Yellowtail in the United States, it reached its billionth case of exports over 10 years. So you can't dismiss that commercial commodity value as a basis of competing in these markets. And I think the industry, as part of its restructuring and part of the work that AG was doing, I think marketing, you say yes, go out with your premium and premiumisation and your brands. That will act, and the coattail will bring the rest. That's probably, there's a lot going for that, and AG was doing a lot of work. And certainly if you go out with your commercial brands, you'll get positioned at the bottom end, and to come up is very, very difficult. But what happens is a mistake is made in that by thinking that this commercial end has no value for export and is no good. It actually has proven to be a quality product. If you look at our regions of Riverina, Riverland, Sunraysia, and so on, those warm inland areas, they've been consistently producing really good export commercial wine that the UK has wanted, that the United States has wanted, that China wants. So let the consumer kind of decide that point. I think premiumisation, yes, and there's a lot of areas where unless you add value, you can't compete because of these other factors. But my own view is that in wine, the jury's out. And I think we should let the industry, just sort it out over the coming years. And I think the commercial market will not go away. 1.8 million tonnes of grapes are produced, rough average, each year. 1 million of those are the warm inland commercial areas that I've talked about. So they've proven that they can grow. They've proven that they get market share. The fine wine end has proven to get market share. The fine wine end has been hit from the GFC clearly because of its part of price of the exchange rate. So sorry for the long answer.
No,
the jury's out.
If it was a simple answer, it would have been.
Yeah, sorry.
Related question, if no one else is forthcoming, and it relates to all three, I think, and that is this: if we talk about premiumisation of products, it seems to be synonymous with no or minimum use of chemicals, perhaps organic, perhaps artisan, certainly not industrial scale or volume scale. And I wonder, it's obviously evident in the US with the move to the support of organic through the USDA and farmers markets and that sort of thing, and we certainly see it in our markets here. Yet that's almost anathema to volume production in many respects. And I wonder whether any of you have any thoughts about that sort of almost contradiction between the expressed desires and likes of the wealthy Western consumer versus the reality of how farm production is actually likely to be able to be increased into the future through productivity and the use of technology. I know it's an easy question.
I'll just answer very quickly by saying I think that it's really what the consumer wants. I mean, certainly there's a market for organics, there's a market for processes and technologies, but there's also a market for high volume, which usually produces a lower cost. And again, I think that if the demand is there and production can fulfill a need, then the market's there. But certainly there's a market. I think there's a market for both high technology and low volume versus high volume and low technology. Depends on the demand.
Yeah, I agree. I think it's demand driven. Not so much the organic one is coming, but not quite yet. But certainly it's demand driven, and there are consumers of wine that want and particularly value place, really the so-called notion of terroir from the French, which exploited it for a long period of time. But certainly, they like place. They like to drink a Barossa Shiraz, or a Cabernet, Yarra Valley Chardonnay. And within that, there are consumers that actually then want specific vineyard. So within the Barossa, there are 3 or 4 different types of peppery and other taste that you can get from the Shiraz, and there are consumers that will want that. There are then consumers that want their everyday drink. They want a good bottle of wine. They go buy the label, make it. That end of the market allows itself to be done more on volume. And manufacturing and efficiency for that is hugely important. Margins are really, really tight. The other end of the market, which is much more place than vineyard, it doesn't lend itself to volume because the vineyards themselves, there's not enough of them to produce volume. So, there's just finite places, and that's the place. You can't actually add to it. It's it. So I think what consumers are telling us is that they want both. And you look at the French, you look at the Italians, you look at the Spanish, you look at the Australians, you look at that's what we're all doing. We're competing on a very similar basis.
I would add in and just make observations in this watching you go through what I call different market cycles. But I think ultimately you want to make sure you provide the consumer choice. And I think as we look globally, this is probably more from the livestock meat sector, is you do see the different market segments. You have those that are willing to pay very high premium price. You have, and probably a very small group of that. You have a little bit bigger group that's maybe in what I call a general premium one. You have a lot of what you call probably conventional buyers. And so I think what I would say on the meat side, just watching global markets, you probably want to position yourself to be available for all the market segments. Independent economic cycles, if you look at what happened in the US recently, well, those high markets, when the economic cycles turned down, went away pretty quickly. And so really you're more left with the conventional cycles. Even if you look at some of the export markets, the higher premium ones suffered more when you look at through the economic cycle. So I think it's one thing to think strategically about, yes, you want to position yourself really in all segments from the high to the low, but you provide the ability to provide the consumer choice. Then when you come back to the innovation side, when I look at globally, is think about what got us to where we are. Is the innovation and technology has gotten us what we are from our productivity capabilities. And if we think about where we need to go, you want to keep innovating, keep going forward. So how do you make sure that becomes part of the acceptable consumer choice, which comes back to industry of how we educate consumers. So we do have a burden, I'd say, on the industry that we need to make sure we help consumers understand how this innovation and technology fits into what they're trying to desire. Think about sustainability, economically, ethically, and other things. So there's a combination of things we need to look at to be successful globally in that whole arena.